Welcome back to Be Rich. I have with my nephew Sashwath from Anand from his university, and I'm here at Madras. We did three programs: one on IndusInd Bank, one on Toyota Motors, and one on Eicher Motors. And we thought we would do a deep dive into a company which is trading at 190 times earnings now. An Indian company which is trading at 190 times earnings has got solid promoters, is growing at above 40% every year. In fact, the last quarter it was growing at 50%. This time it has grown at 47%. A
Yeah.
profitable company not making losses.
It's trading at 165 times earnings.
Okay, it's dropped to 160. The results were bad. So there is a big drop in the price. From 191 times earnings, it's dropped to 165 times earnings. A lot of you have asked me because it has corrected more than 20%, should we buy it? And since it has very good promoters, all of you are very eager to get your hands on it. But I have maintained then and I maintain today it's a diamond needle. You should tread with caution and you should not buy that stock. There are many cautionary tales of those buying good companies at exorbitant prices and seeing their investment go nowhere because Mr. Market feels that he has given too much value, irrespective of the quality of company and the quality of earnings. The market ruthlessly brings down the stock, and you go for years without returns as market catches up with valuations. It could be painful. It will not be a direct cut. The price will not go anywhere till the valuation catches up with it. Or if the market weakens as it has recently, you will see a big price cut. So, can you explain about this company, Shashwat?
Yeah. Well, actually, I'm going to run counter to you today, and let's see whether my argument holds up against yours. So, the company we're talking about is Trent, of course. Trent is a Tata company which is engaged in retail products, which is directly business to consumer. So, they're selling toys, games, footwear, apparels, they're selling you grocery items and then food items. So, this is a huge company. It has a lot of divisions, and the Tatas decided to spin off their entire consumer facing brands into mostly into Trent. And the biggest business which Trent has under its name is Zudio, which as of the financial year 24 is 55% of its revenue. Then it also has West Side, which a lot of us are aware of, which is about 39% of its revenue. And then it also has another company called Utsa, which is part of its brand portfolio. And it has separate associations with Zara and Massimo Dutti. And it has one entity which is operating Zara stores and other entity which is operating Massimo Dutti in India. And the recorded revenues of these entities were 2,870 crores in the FY24. So, given these things, but interestingly enough, it has made losses in the past, which we can talk about. So today it's trading at 165 times PE. The stock price is 6,299 rupees, and the book value is 132 rupees. The dividend yield is 0.05%. So this is where the company stands today. However, let's look at the financials to see what's going on. Its operating profit margin as of September 2024 is 15%, and it's averaged somewhere between 18 to 15% in the past. And if you look at its profit and loss over the years, there have been a few years where they've made losses. For example, in 2013, they made losses. In 2014, they barely squeezed out a profit. And in 2021, again, they lost 205 crores, mainly due to Zudio's expansion and the costs related to Zudio's expansion. And today, their profit stands at 1,921 crores as of March of 2021. And the TTM profit, net profit is 1,809 crores. So, this is what the company's profit and loss looks like. Their balance sheet tells us another story as well, where as of March 2023, they had 2,560 crores in reserves and 4,464 crores in borrowings. So their borrowings were more than their reserves. But immediately in March of 2024, their reserves went up to 4,032 crores and their borrowings went down to 1,753 crores. And today, as of September 2024, the reserves sit at 4,644 crores and their borrowings sit at 1,842 crores. So this is related to their balance sheet. And if we come to their shareholding pattern, it has been consistent with the Tatas owning anywhere between 32% to 37% of the business, and they've only been raising their stake in the company. It went up from 32% to 37% in March of 2020, and it has stayed there ever since. So, given what I've told you and what you have mentioned at the start of the video, what do you think about the quality of this company?
Okay, let me just tell you how this company came about.
Yeah.
When Ratan Tata took over the Tata Empire, they had a very fashionable brand called Lakme, which is now with Unilever and is very successful. Two brands from Tata's were acquired by Unilever. One is Lakme and another is Hamam. Lakme was run by Ratan Tata's stepmother Simone. So when the money came from selling Lakme, they used the money to buy a store in Bangalore called Littlewood, a retail store, Littlewood, and they called it Trent. It is called Tata Retail Enterprises. This is Trent. Now, over a period of time, Trent has experimented with lot of platforms. In Madras, there was a very successful company called Landmark, book retailing company I visited many times. They bought a controlling interest in Landmark. They tried to expand that. They bought a publishing house, Westside, which was later taken over by Amazon. The Landmark acquisition was a failure and they could not succeed. They shut it down. Along with Pesco, they started a grocery chain called Star Bazaar. Star Bazaar is still operating, but in places like Madras, they have closed down their stores. The promoters are very clear if the store is not profitable, they will shut it down. The strategy of this company has been to put profits first and then look at expansion. If an expansion is not profitable, they will shut it down. If my memory serves me right, you have to dig up the data. But they tried to bring Benetton into India, it didn't work out. They got out of United Colors of Benetton. They have Zara and they have the other brand which you say. Star Bazaar itself is a joint venture. What turned around the company is in Westside, which is their textile division. They stopped selling other people's products and started selling their own private label products. So the first success story was Westside. After succeeding in Westside, they launched Zudio, where fashion was available at a cost. I don't know, I have not visited Zudio. The costliest product in Zudio is 2000. So it was a value conscious product. And they brought in outside partners as franchisees in that, which they allowed them to rapidly expand without putting their own money in it. In the last quarter, they have opened the first Zudio store outside India into UAE. That means if it is successful, they'll open it wherever there is an Indian diaspora. The success in both Zudio and Westside is that they are not retailing other people's products. Now they have done one more thing. They have gone into copying that into Star Bazaar. They are trying to increase the private label share of the business in Star Bazaar. That is not selling other branded products, increasing the mix in the favor of their own products. So this is similar to what they are doing in Indian hotels, where they are growing at a rapid pace in an asset-light model. Because retail requires that you put up a lot of place. So it is an asset-light model. And they are growing at a breakneck pace, expanding into Tier 2 and Tier 3 cities. I think Westside is also available on the Tata New app now. I think Zudio will also become available on the Tata New app. The Tatas have three different wings in which their retail business is growing. One is, of course, what you have correctly said, Trent. And then on the premium segment, they have something called Tanishq, the Titan, Tanishq, and Bhumi, and all those stores. And they have a company called Infinity Retail, which sells Chroma, which is Chroma products, which is independent of Trent as of today. Chroma just turned profitable last year. But again, in Chroma, they have used the same strategy that they used in Zivio, where it is private label products which are driving profitability and margins. So you have Chroma televisions, Chroma refrigerators, so on and so forth. So the success of this company is based on using private label and expanding on an asset-light model. They brand something like Zudio with something that Reliance would like to own. So Reliance in competition has gone and tried to tie up with the Chinese company. There's another company called Aditya Birla Fashion Retail, which has acquired big fashion brands to become profitable, but has still made losses this quarter and has been losing money for more than a year. What Zudio has done, it has moved into complementary businesses. Now they have gone back to their original business and they are launching low-end cosmetics to compete with Reliance and other high-end brands. I think they are also calling that with Zudio branding. I'm not sure, but I read some at the Zudio branding. So they are bringing dress and they are bringing cosmetics. And what they are trying to do now is even more a deadly combination. Tanishq is a high-end brand. Gold is sold at a 200 rupee premium per gram. So, to capture the lower end of the market, they have tied up with a company to make lab grown diamonds and they hope to sell a solitaire engagement ring for 10,000 rupees. So, he is now looking at a value proposition in using lab grown diamonds. He is looking at a brand in clothing, West Side, Car Bazaar, and they have a premium brand in Zara. And in Tanishq, in Titan, they have Mia and one more brand, Zoya, I think. They have two more brands there, which makes 16 and 18 karat golds. And they are even looking at 11 karat golds. So basically, between these two companies, they are trying to take the entire value chain from the highest customer to the lowest customer. Interestingly, the current chairman of Tata Trust is the person who is running this company, who is the executive chairman of this company, and the future Tata chief is running Star Bazaar. That is his son. Neville Tata is running Star Bazaar. Their sister is running Tata Digital. And so this is the retail division of the mighty Tatas. So this is what it is. Now, the company makes 18% profits. It's homegrown brands. They have the Tata name for selling their products. But I am not going to pay 165 times earnings for this company. I own a tiny portion, very tiny portion. I bought a 10 rupee stock at about 1500. I found it was too expensive then. I bought a very small quantity. It has since then become 1 is to 10 split, and the split stock went up as high as north of 8,000. What is the highest value? I think 8,000 and odd it went.
The stock has gone to 8,234.
And it has corrected nearly 20% to come down to this value. So I think there is a limit to growth, and at some time the valuations will come down from stratosphere to earth, and we have to wait for that time.
Because
But other than
the profit has grown by 59% year on year over the past 10 years.
yes, but it cannot grow like that. No.
And over the past 3 years, it has apparently grown at 101% year on year.
Yes, but how long can it grow? But even then, can you pay 200 times earnings for that?
Yeah. The PEG ratio is 2.91.
That's an extremely good ratio. But do you think it will continue to grow like this for the next 20 years?
But then a good PEG ratio is if it's under 1 or equal to 1, right?
Yes. But that means it's growing very fast. The price is that values the growth too much. So the price drops, PEG ratio will drop.
Yeah.
So
The PEG ratio of 1 is considered fairly priced, I think.
yes, so this is overvalued. So I would look at something like 4,000, 3,500 for this. If this current market valuation is like this,
Yeah.
it is going to continue to grow at 50% earnings. But there is a slowdown everywhere in the market. And I can sense a slowdown here also in the last quarter number when you compare it with previous quarters.
So the return which they've given over the past 10 years, year on year, is 46% in terms of the stock price. It's compounded at 46%, and it's compounded by 65% over the past 5 years. So even though the valuation has been sky high, I mean, for the past 10 years, even though the P/E ratio has hovered where it has hovered, the stock price seems to have very good amount of return to investors.
Yeah.
What do you say about that?
But I don't think the next 10 years we can grow at the same pace.
Okay. So you don't think the PE ratio will stand where it's at right now?
It's already corrected now. What was the PE ratio at 8,200?
The PE ratio at 8,200 was around 233.
From 233, it has dropped to 165.
Yeah.
So let it drop to 80 now.
Okay. But over the past 5 years, it hasn't dropped to 80 ever. The PE ratio.
Then there are better stocks to buy.
Okay. Over the
I
past
rather,
past 10 years, except for the time when they made a loss, the P ratio dropped to as low as 96 in 2017, but it has never reached those levels after that.
yeah, but you can drop to 80, right?
Well, it hasn't dropped to 80 in the past 10 years.
But if you really want to own the stock
Yeah.
and not pay so much for it, there's a way to do this.
Okay. That would be to buy the investment company.
You buy the Tata Investment Company.
Yeah. That is also something which investors can definitely do.
If you buy Tata Investment Company, even that is expensive.
Yes, it is very expensive.
It is book value, right? It's just above book.
Tata Investment Corporation is it's actually trading below book value.
So it would make, if you want to own Trent, you buy Tata
But
Investment Corp.
caveat here is by book value it's decently priced, but by PE ratio it's
It's
enormously
a
high.
holding.
Yeah.
It's a holding company. Therefore, the PE doesn't matter.
Okay. Then yes, it's fairly priced. Correct.
So the idea of owning Trent, if you want to buy Trent, is you buy Tata Investment Corporation. Tata Investment
Over the,
Corporation, in turn,
over the past 5 years, in 2022, for example, the holding company was trading at zero point 0.3 times book value, but today it's trading at zero point 0.9.
that's because the Tata Group has done extremely well in the last 5 years.
Okay. It went all the way up to 2.1 times book, and then now it's fallen down to zero point 0.9 again.
Yeah, and if my memory is right, 6% or 5.9% of Trent is owned by this company.
Yeah, it's 4.28%.
Yeah, you get to own Trent if you own this.
So the Tata Investment Corporation, it owns Indian hotels, 1.26% of Indian hotels. It owns Oriental Hotels. It owns Tata Chemicals, 6% of Tata Chemicals, 0.03% of TCS. It owns 4.65% of Tata Consumer. It owns 1.69 of Tata Elxsi, Tata Motors, Power, Steel, Titan, Trent, and Voltas. So this is Tata Investment Corporation.
So it is better to buy Tata Investment Corporation rather than buy Trent if you want to own it at all.
Yeah, but then you won't get any much dividends out of it. It's just capital appreciation.
But you want to own stocks for capital appreciation.
Yeah,
If you want to own stocks for dividend, you better buy bonds.
right. So that being said, we hope you enjoyed this video.
Yeah, I hope you enjoyed this video. I certainly enjoyed making this video with Sashwath. If you did like this video, press the like button, subscribe to our channel, and turn on the bell notification. We do have a Hindi channel called Paisa Boltha Hai. I urge you to subscribe to the channel if you know Hindi, or if you have friends who know Hindi, then the contents in MoneyPechu will come on in Hindi in Paisa Bolta Hai. So I suggest ask them to subscribe to Paisa Bolta Hai. Thank you for your help.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan, and I have rolled out our Substack, which is basically a blog slash newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for the Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.